Ladies and gentlemen, Callum Woodcock, welcome to Founders with Nick.
Thank you very much. I hope I live up to your expectations.
Why do you think nobody has really nailed this?
So our model with our wine investment syndicate is we present a strategy, we raise funds, and then we deploy those funds. Most wine investment businesses start out with really good intentions. They actually end up at the accidental Ponzi scheme.
Sounds like it's going really well, but if it all just collapsed tomorrow, who would you worry about telling first?
Our underlying clients, first and foremost. Secondly, it's going to be shareholders. And I should have mentioned as well, obviously the team, but the team would be very aware that this was happening, I imagine. It would be Armageddon for me.
And anybody listening now that's thinking about starting their own business but doesn't know what to really do, what would you say to those people?
Thinking that you need
Well, ladies and gentlemen, boys and girls, I am super excited. I can't really believe I'm here. A year ago, I was selling shoes and ties to pay rent. And now I'm interviewing Entrepreneur of the Year, nominated Entrepreneur of the Year, but they won Seed Legal Startup of the Year, Callum Woodcock and WineFi. It's amazing how far life can come. Follow your dream, follow your passion. If you have that muscle that you want to exercise, you think there's something destined, you're bored of your 9 to 5, your boss has screwed you over with a bullshit $2,000 pay rise, we've all been there. Think about leveling yourself up, think about quitting a job. Look, we've got a WhatsApp community now. If you want to be part of that, the link in the below. We'd be great to have you spitball ideas, potentially meet another co-founder. So yeah, super interesting. Thank you so much for watching the show. Like and subscribe. If you don't like and subscribe, that's also fine. It's a free country. Take care. Bye.
It's fucking hot in here.
it is very hot.
It's very hot in here. I've got Callum Woodcock with me, ladies and gentlemen. I've come in person to see him, which is very exciting.
In Barcelona.
In Barcelona.
In the world's hottest venue.
I know, 30 degrees. But no, Callum, thanks a lot for coming on. I've got loads of questions. We've got just under an hour. Good. But here we go. So Callum, I watched a few of your interviews before this. He speaks well, he's smart, he's clear, he's confident. But I feel there's more. So I flew down here to Barcelona to sit with them in person, not just to talk about fine wine or fintech, but to get the bits that don't usually make the cuts, the doubt, the decisions, the things that keep them up at night. Because for the people listening, the founder curious, the ones thinking about building something of their own, but they don't know where to go, this is what they want to hear. They want to just hear how it works, but what it takes. Ladies and gentlemen, Callum Woodcock, welcome to Founders with Nick.
Thank you very much. I think that is a hell of an introduction, Nick. So I hope I live up to your expectations. If I'm sweating, by the way, just for the audience, it's not because of Nick's questions. It's because it is 35 degrees in this room. Or it might be because of Nick's questions. I don't know what they are yet.
Couple of curveballs in it. Okay, question number one to kick it off. You've been nominated for Entrepreneur of the Year. Mm-hmm. WineFi was named Startup of the Year by Seed Legals. Yeah. When you heard those things, what feeling came up for you?
Sure. So, the Seed Legals one was genuinely a massive proof point for us. There are some awards that companies receive because the people giving out those awards want access to their audience. And, we had one where someone reached out and said, you've been nominated, you've been nominated as Wine Merchant of the Year. And I responded saying, we're not a wine merchant, we're a wine investment platform. And just because I knew, I'd never applied for it, because I knew it was just a random award, I responded and said, could we be Wine Investment Platform of the Year? And the guy just responded and said, yes. So there are awards and awards. But I think the difference with Seed Legals, so we've worked with Seed Legals since our pre-seed round. We've had an amazing experience with them. They've really been on the journey with us. Our previous account manager, Andrew Turner, literally had to talk to me about what SEIS was, how an instant investment agreement works, how term sheets work. He really had to explain the basics to me. So I've really been on that journey with Seed Legals. So when I saw that Seed Legals were hosting their second ever award ceremony, I thought, great, let's apply. And honestly, so I was there in person, and it was a really strange one because a couple of my friends, old friends, from university and things, are founders, and they were there because it's such a big event. My dad, who runs a climate tech SaaS, was there. And I went along with my co-founder and operations director, Ollie Thor, really not expecting to win anything. So we'd had a couple of calls with Laurent, who is the chairman and has since invested in the business. But the category that we thought we had a chance in was like social sensation. So slightly cringe name,
Whoa.
but we've got a bit of a
Tough, that one.
well, we've got social sensation. So that's clearly to do with your social media presence. And I was thinking, okay, that's probably the area that we have the best chance of winning, or even being in the running to win. And when the finalists were announced, so we've got a big LinkedIn presence, but 50,000 followers, not
Mega.
No, but not like we're not Nestle, or we're not Wild, who are the ones that were nominated. So they'd recently been acquired by Unilever. They are just a huge brand. And when I saw they were one of the finalists, I said to Ollie, I was like, well, we won't be winning that then. And we went along, and sure enough, that was the first category to be announced. We didn't win that. And at that point, I think both Ollie and I were like, okay, we're out of the running. And so when we were finally awarded Seed Legal Startup of the Year, which was the very last award awarded that night, it was genuine disbelief, because we knew that it was a really meaningful one where the company had been really, really carefully assessed by a really reputable company who takes this kind of thing really seriously. So we were delighted. I mean, in some ways, it's the achievement that has meant the most to me as a founder. I know that sounds strange, but there is an expectation, and because it's an expectation that the business is going to grow at a certain level, you're going to use your pre-seed round to figure out product market fit. Then you're going to use your seed round to figure out your unit economics. And then in an ideal world, you're going to exit the business, or there's going to be some other liquidity event. It's almost like that's the base expectation that your shareholders have for you. So when you do get that outside recognition, it is genuinely a really big boost for the team. And I hadn't expected it to be as profound as it turned out to be. This was a really long answer, so you'll probably have to cut it down.
We're not cutting a single thing down, ladies and gentlemen. Okay, so so just hearing you sound obviously very proud.
Yeah,
you came out a bit of left field. I mean, the big hitters of Wild and the other ones. So that's okay. In terms of the expectation, Cam, I got that impression from your answer that would you rather have bootstrapped it if you could?
No, not really. I think actually having shareholders has been great for us for two reasons. There's a lot of stuff on social media about bootstrapping, almost trying to elevate it above venture capital, and I think it's completely the wrong comparison to make. Certain businesses, cash generative businesses, can be bootstrapped from inception, and if you've got the capital to do that, that's great. Businesses that require, in our case, we require an audience, and we require a level of ability to outperform the wine markets by really leaning into our data model. So that was always going to be a venture business. I think that if anything, it's having shareholders makes me feel like I'm very responsible to other people. And that's a really big motivator. And then one thing that I won't be doing again with any future business is, in the early days when I was raising pre-seed capital, so we raised 477K, so a relatively small pre-seed, I had a few friends who wanted to put money in. And in the early days, when you're pre-product market fit and it feels like you're trying lots of things and they're not quite working, which is an experience that every founder goes through, because you have to work out how to position your product and you have to work out whether the market actually wants your product. The thing that really kept me up at night was the idea that I could lose my friends' investments. And so I think that's the only drawback really of having shareholders. But as long as you communicate with them, and we send monthly reports, which I find very therapeutic to write. But some companies send quarterly ones, some will only send them once or twice a year, and they're just out of touch with their shareholders. And actually, your shareholders should be your biggest advocates. And we've ended up, working with boutique wealth managers, family offices. We've had a stack of referrals through our shareholders. And a load of our shareholders have gone on to become actual WineFi clients because they can see, they can see how the business is evolving. And they're like, okay, well, I want to leverage this. And so, no, I don't necessarily think that's a bad thing. If anything, it can be a positive.
If somebody's listening now that is like, do you know what? I can't wait to start my own business. Can't wait to start my own shop. It's great, but I don't have any connections.
Yeah.
How did you go about doing that? Did you have a little black book? Did you knock on doors? Hi, my name's Callum. Do you want to invest in a bottle of Chateau de Chateau? How do we go?
Yeah, sure. Good that you know your fine wine. Yeah.
Come on.
That famous producer.
Famous
Chateau le Chateau.
On the west bank of the Nile.
Yeah.
Go on.
Oh dear, I'm going to be pilloried by the wine community for this. But no, so I didn't have a black book. So I'd always wanted to be a founder. But I had started, like so many people do, working in big corps. So I started my career at Fidelity, then moved to JP Morgan, good names on CVs, but working at big corps, there's so little that you could take to a startup there, or at least, you don't have that. You're so specialized in your role because they've figured it all out and they've grown to a certain scale that actually, what you need when you're at a really early stage of a startup is you almost need to be like a talented generalist. So I was very aware that I needed to develop some startup experience prior to founding a company. It was a confidence thing, I think, for me. It was basically going, okay, I'm a sales guy, so I've always been worked in sales. And it was how can, if I can show that I could take a company from A to B, someone else's company, then I will have the confidence and the ability to pattern match from that journey so I can apply it to my own company. So I joined a very early stage startup at the time called Nomio. I was employee number 3. I was their first commercial hire. They're a legal tech startup, so nothing to do with asset management or wine. But got on very well with their founder, Josh Trion. That company's now doing incredibly well. Scaled them from 0 to 50 plus customers, including enterprises and FTSE 100 listed companies like Marks and Spencer's. So real, experience selling across, from startups all the way through to enterprises, which was fantastic. And then it got to the point where I was going, okay, I'm now ready to start my own thing. I've been here for 3 years. Let's make WineFi a reality. And actually, my only contact from that experience was a former colleague who had since gone on to work in venture capital. And I basically sent her, it was the worst pitch deck. Looking back, it really cringes me out. The worst pitch deck for WineFi. The idea was coherent, but I'm not a graphic designer and it just looked terrible. And I sent it to her and she sent it on to 3 people. One of those 3 invested, and then they sent it on to 5, 6, 7 people that they thought might be interested. Because once they've invested, obviously it's in their interest to pass it on. And it really snowballed from there. But, my dad, he had built and sold 2 companies. So had some cash. And I'll never forget, I approached him and basically said, will you put 10 grand into WineFi, etc.
Yeah.
And because he's built it himself, he said, I won't invest in your pre-seed, but I'll invest in your Series A. And I thought, okay, right, well, thanks. That's not very helpful now. But then sure enough, when we went to raise our seed round, he was like, I bet you don't want that money now, do you? And I was like, no, we've got no need for it now. But
good parenting.
Yeah, I know. It didn't feel like it at the time. But no, it's and that's not supposed to sound at all kind of like pretentious at all, but it's trying to make the point that I didn't have a network. And it is really about getting to people who can refer you on to people. We didn't do anything cold. And I think I probably experimented with cold outreach to investors and we got absolutely nothing back. So I do think it is genuinely do you get on with that investor? Because at pre-seed is effectively a punt. You don't have sufficient traction for anyone to be able to draw any conclusions from, for as to how good you are as a founder or how the business is running, especially if you are a first-time founder, which I was. So I think that, if I could do it, anyone could, because I just didn't have the connections. I had one person.
It's mental. It sounds like, just digesting, sounds like the idea for WineFi was compelling enough because you saw a gap in the market. So for somebody to be like, okay, he's actually got something here, and irrespective of the presentation and the graphics,
which were terrible,
which were I'm sure, and for that person then to be like, right, actually.
Yeah.
So I think that, so anybody listening now, if you have that idea, send it to that person.
Yeah.
I think just send it. What's the worst that can happen?
No, 100%. Yeah. I think for that year, my motto was literally just ask. And there's a phrase that I love, which is closed mouths don't get fed. And actually so many people, because they're embarrassed to ask for help, just sit there. I did it for 7 years prior to founding a company when all I thought about every day was founding a company. But I felt like I had to figure it out on my own, which in hindsight was just a weird thing.
Really tough that.
Yeah, but it was a weird thing to have thought. And I think it's because famous entrepreneurs, the kind of Bezoses and Musks of this world, all of them have crafted this narrative around themselves. And I think that when you're, a youngster and you're reading about these people that are kind of like your entrepreneurial heroes, I'm not saying that I in any way idolize Elon.
Yeah.
Elon.
Yeah.
But there's no doubt that he's a fantastic businessman. And I think because there's all these narratives around people doing it themselves and not accepting outside help, and there's that cult of self-reliance, it's very easy to become indoctrinated by that. And the truth is, no one has got anywhere without working with other people. And there's a difference between self-reliance and just being stubborn. And I think that I was always kind of thinking, it doesn't count if I don't if I don't figure it out by myself, and actually just asking for help, especially about an area that you don't know about, is just the most obvious course of action. And I don't know why I took so long. And the best entrepreneurs, there's a guy who I think advising would probably be a generous word, but he's a university student who's very passionate about bringing Gen Z into wine. And we've been speaking a lot about the business that he wants to build. And he's 20 years old and has reached out to the right people. He's asking the right questions. And, if you just approach a subject and you say, look, I don't know how to do this, it's actually it's a very charming thing to hear as someone that's able to help.
Vulnerable, very vulnerable, wasn't it?
Yeah, it's fun. Yeah, and that's why I suppose it's
I think that's why we all wear masks. I said this many times on the show. We all have this immediate mask, and then, after you meet somebody, then they take it off. But I think people get scared.
Yeah,
for
sure.
Which is silly.
They're scared of looking stupid.
Of course. Yeah. But actually, it's the best way to do it. Have you...
We do in this heat.
There we go. Have you ever been looked down on in the wine industry?
Yeah, massively. I think the wine trade's a really interesting one. It's always the wine trade, by the way, not the wine industry.
Unbelievable, guys.
Yeah.
Unbelievable.
Yeah, first Chateau Le Chateau. Now
Chateau Le Chateau.
Yeah.
Now there's, okay, the wine
trade.
trade.
I thought you were a connoisseur. But no. So, yes, we definitely have. I think when we started, any new wine business, I think, is looked at with suspicion, and actually for good reasons. One, there have been historically, unfortunately, a fair number of wine investment businesses that have either mismanaged, their operations, or in some well-publicized cases have been outright frauds. Because you're effectively saying, invest in this asset, it's stored in a warehouse and you can't see it. So, and it's unregulated, it's not FCA authorized. So there is the opportunity for bad behavior to occur. So I think that there's always a degree of suspicion from the wine trade, especially the older and more famous businesses. And I also think that, in a way, that suspicion is justified because, one, you need to ensure that a company that you're working with is legitimate, but also where I think WineFi quickly has developed relationships is because of our model. So our model with our investment syndicates, our wine investment syndicates, is we present a strategy, we raise funds, and then we deploy those funds. Whereas a lot of the wine trade works almost on like an IOU system. So, you have a client lined up who wants to buy X number of a certain wine, and you will speak to someone else in the marketplace saying, "Oh, have you got this? Send me an invoice." And it's when those invoices get paid. And we developed a reputation quite quickly as being, well, I'd like to say high integrity, but also I think paying invoices quickly. And that actually matters massively to the relatively low margin businesses that are wine. But I think the really big unlock for us, and I've spoken about this before, but a holdco, a very prestigious holdco for fine wine businesses called Cotri, took a position in us. So Cotri own a network of fine wine businesses globally, probably most notably Lay and Wheeler, so a well-known wine merchant. But also they have their own purpose-built storage facility just outside Ipswich, Cotri Vaults, where we store all of our wines. And their CEO, Michael Saunders, is a very reputable and established figure within the wine trade. So he was one of the founding team of Bibendum, which anyone who knows their wine listening to this, like yourself, Nick,
big wine guy,
will know. And actually, I think that when people then began looking at WineFi, they went, okay, these people, this is from the supply side, these people have someone who we respect and trust has done due diligence on this business. And we noticed immediately an increase in people willing to work with us, and actually an increase in people within the trade taking us seriously, because you have to earn that, really.
That's quite a feat, by the way. It's only been, is it 18 months?
It's 18 months, yeah.
18 months. Do you think the business, it's been maybe a negative framing, but do you think you'd be where you are without
no.
a holding company?
No, for sure. I think it gives us a lot of credibility with both our customers and with suppliers. And there's been a few very touching examples actually where I jumped on a webinar to present on a certain syndicate that we were doing, and there was someone that was watching who asked some very informed questions, obviously knew his wine. And it seems like a lot of investors have a wine guy. They have a friend who's...
We all got a wine guy.
Yeah, we got a wine guy.
We got a wine guy, I got a wine guy.
But, like a friend who is super into it and very knowledgeable. And this guy that had joined the webinar sent me a screenshot afterwards. So I'd never spoken before, but he sent a screenshot of his uncle that he'd contacted, who was actually very deep in the wine trade. So a real insider. And his question was, these guys are legit? And the guy had got on our website the wine guy, and looked at about us and seen the association with Cotri and just went, if these guys are working with WineFi, then WineFi are legitimate.
Done.
So I do think that has been a huge advantage for us. And I'm very grateful for that.
Why do you think, you alluded a little bit earlier to it, but why do you think nobody has really nailed this? Like, why do you think somebody's not come along and gone, do you know what? There's a gap. That's it. Why don't we just bring a bit more credibility to a beautiful passion asset class?
Yeah.
Like, why has it taken such a long time for this to be really nailed?
Yeah. So I think it's really interesting to look at the collectible space more generally to answer your question in a characteristically long-winded way.
We're here on the show. This is it.
But if you look at a business like Masterworks, for example, they have $1 billion under management. They work in the fine art space. So
I know these people.
Yeah.
I know these people. I think I've late night scrolling on these people.
yeah. They are the kind of like...
I think I was three clicks away and half a bottle of vodka from buying a fake Picasso, it looked like. But no, I'm with you on that.
Yeah, but their model is to fractionalize paintings. And that makes sense because the cost of entry for investing in a painting is much higher than the cost of entry of investing in wine. You could build a bespoke wine portfolio from, let's say, 25 to 50K. Whereas, if you're buying an Andy Warhol painting or something, it's well over $1 million. So different model, but they appear so far to have done very well. And so I remember looking at their model and thinking, similar question to you, like, why hasn't anyone done this in wine? And there is a company called Vint out there who have recently pivoted away from fine wine investing, who had a similar model. But I honestly think that the reason that it hasn't been done is just because most wine investment businesses start out with really good intentions. So you are selling to clients that want to invest in wine. There is a lot of demand for investing in alternative assets, and wine in particular, because it's uncorrelated or very low. Our head of data will tell me off using the phrase uncorrelated. It's very low correlation to traditional asset classes like equities, bonds, and commodities. It historically has offered equity-like returns. It's certainly outperformed the FTSE 100, and in the UK at least, it's exempt from capital gains tax in most circumstances, or in many circumstances. Certainly, all WineFi portfolios are. So again, lots of great characteristics. Why hasn't it been done? And the issue, I think, is structural. So businesses start out with really good intentions. They go, okay, great. We think we have the ability to outperform the market. Let's grow our client base. The issue is when you're only selling to private clients, so individuals like you and me, who might go out and invest 25K in a wine portfolio, you own the wine. That's your wine. It's not shared between multiple investors. It's not in a structure. In our case, it's a syndicate structure, but there have also been closed-ended wine funds. And the issue with that is when you get to, let's say, 100 million under management, the average ticket size, I'm going by WineFi's average ticket size is 10K. So let's say that that's standard across the industry. That's 10,000 investors. And when the market turns, every single one of those investors has the opportunity to sell their wines because they own the wines. They can instruct sale at any time. That's their right. And the issue is that wine is like a semi-liquid asset. It's like it's a lot like residential property in my view in terms of the liquidity. Like, it's not quite private equity. You can sell out earlier, but it's going to take several months to sell. And especially in a down market, liquidity dries up because if you're a hardcore wine collector or you're in the trade, you're looking at the market falling and you're going, why would I buy this at this price when if I wait 3 months, it'll be at this price?
Gosh, yeah.
So it becomes even less liquid. And then the issue is clients who have either been slightly misled by people pretending that it is liquid or who just, haven't done their own research, start leaving negative reviews. People then, get spooked by those reviews and asked to sell their own wines. And you end up with this kind of bank run.
I was about to say mini bank run, yeah.
And that's a very difficult position to get out of. And even the company with the best intentions, if they want to reach a certain scale, which we do and always set out to do, which is why we raise venture capital, it becomes an accidental Ponzi scheme because your only way to exit the wines that your clients want to sell is to onboard new clients and sell those wines to those clients. And the issue is, as your reputation decreases and as those 1-star Trustpilot reviews build up, that flow of new clients becomes difficult. So they actually end up in accident. I published an article on LinkedIn about this with the accidental Ponzi scheme. And I think that's the structural problem. Whereas our syndicates, if you put them into a structure where you as a syndicate member can't unilaterally withdraw from a syndicate until the wines are sold, it's an anticipated holding period of roughly 5 years for most of our syndicates. Is that less attractive to investors? Yes, I would prefer not to invest in closed-ended stuff versus open-ended stuff, but that is the nature of the asset class. If you give people the ability to withdraw, the only option to you as an investment manager is to sell down the underlying wines in order to furnish redemptions. And that is a surefire way of destroying your
Yeah.
investors' returns. Because if you have to sell a wine quickly, you have to take like a 10, 15, 20% haircut. And, therefore you annihilate returns for other investors. So we made the difficult decision to go, okay, we're going to, take notes from what's happened in the market and say, you cannot unilaterally withdraw from these products without the syndicate having a vote in order to ultimately protect your own returns, which is a weird dynamic.
You're smashing it. You've totally flipped the scripts on the asset class. The question is, how do you come up with that? Is it around a table or is it late at night on the loo? What's going on?
So I actually think, to be honest, I was looking at that model existing in other illiquid alts. And I thought, okay, that's interesting. But then there's an additional problem in the UK where the way that you traditionally fractionalize, for want of a better word, an asset is you would put that asset in an SPV and then sell shares in that SPV. That incurs capital gains tax because it's equity that you're ultimately selling. Wine is CGT free. So we thought, I was like, this is genius. Why has no one done this? And then I was like, this is why no one's done this. So we worked with a law firm we spent a lot of money on lawyers, but we worked with a law firm to ultimately structure a bare trust nominee structure, which allows syndicate members to ultimately hold the underlying wine outright as if it was their wine.
Okay.
And that allows the CGT benefits to flow through to the end investor. So it's a very clever model that I can't really take any credit for.
Okay.
We just have some very smart lawyers.
Who's WineFi not for then?
Great question. I think we want to avoid lower end retail. I think that the moment that you try to sell to everyone, you end up selling to no one. And if you're looking to invest £50, £100, £200, fine wine isn't your asset class, right? It's let's you want to be maxing out your ISAs first, maybe do some SEIS, EIS tax planning stuff. And then once you have a diversified portfolio, then you should be looking at wine. And if you're lower end retail and you've got, a very small investment portfolio as it is, it's more like a punt. And we really want to avoid those people because also, one, they're not sophisticated. So I don't think we actually have a right to be selling to them. I mean that in the official sense of the term. I'm not saying they're stupid. But two, it would sit uncomfortably for people not to understand both the benefits and drawbacks of wine as an asset class. And it is very esoteric. So we try and avoid those. And then interestingly, in terms of our client base, we've recently done a big exercise looking at age ranges for the B2C side, because we also work with family offices, etc., as I mentioned. And in terms of volume of clients, overwhelmingly, they're between 30 and 39, which is interesting. But what was really interesting was roughly 50% of our revenue is made up by a very high number of clients aged between 30 and 49. So that's 50% of our revenue. The other 50% was made up by a much, much, much smaller number of clients who are 50 to 59. So a smaller age range, but they have much more capital and they invest far more.
Okay, not surprising.
Yeah. So I think that, we're looking at investors. We talk about, laughingly internally, we talk about, high net worth and sophisticated investors. And then the lower end, the term that we use is Henrys. So high earners, not rich yet, which I think is a great phrase. But that's, lawyers, doctors, asset managers, entrepreneurs, salespeople. So yeah, I think we're looking to avoid that lower end, but yeah.
Maybe a bit more direct this, but if this all sounds like it's going really well, but if it all just collapsed tomorrow, if it all just totally collapsed tomorrow, who would you worry about telling first?
Our underlying clients first and foremost. So we've structured the business in a way that if WineFi was to cease trading, the wine remains the property of our clients. But dumping a load of wine on them and saying, right, this is yours now, isn't a good strategy. So we would make sure that we had, and we do actually have a contingency plan in place just because it's good planning.
Well noted. Yeah.
So the management of the underlying wines, the option of passing that on to a third party to manage is one that's open to our clients. So I think that's number one. And then secondly, it's going to be shareholders.
Look at that smile. Yeah. The awkward smile there coming out.
yeah.
Sorry, guys.
Yeah. And I should have mentioned as well, like obviously the team, but the team would be very aware that this was happening, I imagine.
Yeah, I get that.
So yeah, I think those three is, it would be Armageddon for me.
Is this your identity?
Oh yeah. Yeah. I'm totally a workaholic. And I think you have to be. I mean, you run an early stage startup, you understand what it's like.
Ladies and gentlemen.
It really does. But it really does, as you know, it really does become your baby.
Yeah.
You feel very responsible for the business and for your clients and for your shareholders. And I think, yeah, especially in investment business.
Do you know what's really interesting? Just being real with you for a sec. I'm the opposite to you. I'm bootstrapped.
Yeah.
And I'm quite an unstructured individual anyway. And I think I don't know if
a lot of founders are.
I feel like we're total weirdos every time.
We are.
Somebody said to me, I said, Nick, I remember I got this job and I was like, they gave me some money. I was like, oh, this is great. And I was like, I think I'm going to quit. And they were like, why? You'd be insane. I was like, I think this is a load of shit. I was like, I think this is shit. I had to get Susan to sign off with Keith. Keith then is not in town. He's away for a week. And then I've got Glenda and Tim. Like, who the fuck is Tim? I haven't even heard of Tim. And Tim needs to sign off this. I'm like,
I know what you mean.
It's stupid, isn't it? It's the bureaucracy was killing me. But no, I was going to say, I think in terms of like the failure piece, like if my business LNGR failed tomorrow, I wouldn't know who to tell first. I'd probably go for a long run and then breathe. And then like the nutter baby I am, I then go, right, what's next? I mean, it'd be funny if you opened up a WhiskeyFi business. That would be fucking class, by the way. WhiskeyFi for the guys that brought you WineFi.
God.
No, I'm joking.
No, interestingly on that, so I spoke to one of our shareholders, who's unbelievably successful as an individual, but has had ups and downs. And he's a big wine collector himself, which is why he was interested in investing in the business. And he said, I was asking him, when do you open like the Lafite, 82 or whatever? And he said, I actually opened it when I've had a really bad day. And I was like, that's such a good lens to look at. Most people are like, oh, let's open this bottle to celebrate something. Yeah. And he's like, no, I'm miserable. I'm drinking good wine. Which I think is something to live by.
Favorite bottle of wine ever?
So I think my favorite ever. So I do really love champagne.
Okay.
And English sparkling wine. My father-in-law is deputy chairman of Gusbourne, so I have to.
Okay.
I have to slide that in as a disclaimer so I don't offend.
I feel like you've got 1,000 sponsors behind me. 1,000. Callum, I feel like you're an F1 driver wearing those different hats and you're just there.
No, I mean, we don't invest in any English wine because the secondary market stuff is slow, but I want to bang the drum. I want to bang the drum for English wine.
Okay. So favorite, like the champagne region.
Yeah. So I really do love champagne, but I think the most special bottle I've ever had was the first bottle that really got me into fine wine, which is Lynch Barge.
Yeah.
So I'd had
Lynch Barge.
like aged Bordeaux. They call it lunch bags in the trade.
Okay.
Pronounced in a horrible English way. So I'd had a bottle of that when I was in my early 20s. And until that point, I had kind of never really understood why someone would spend X amount of money on a bottle of wine. And then a lot of people talk about this, where you have this first bottle and you go, oh, okay, I get it. Like this was like aged Bordeaux. It was incredible. And then suddenly you start to understand why people get so obsessed with this subject.
Okay.
And that has kind of stood out as being, the real kind of catalyst for me. But again, I first really came to wine through an investor's lens rather than a consumer.
Well, halfway through the interview now, how do you think it's going? Is he nervous? Is he on the back foot? Do you think I've opened up enough? Do you think I should be asking better questions? Would love for your feedback. I need to get better as an interviewer as well. I have to say, every interview is like a marathon mentally. Anyway, enough about me in the show. Get back to it. Let me know the link in the comments.
Okay, and anybody listening now that's thinking about starting their own business but doesn't know what to really do, what would you say to those people?
So I spent 7 years, as I said, thinking about nothing apart from starting a business. And I think I got two things really wrong. The first thing was thinking that you need a co-founder. You don't.
So with you on that.
Yeah.
By the way.
There is especially if you're thinking about building a tech business. And I was thinking about building a tech business because that's where like, oh, look at how these sexy, venture scale tech businesses are working. You think you need a technical co-founder and actually you don't. WineFi is part hedge fund, part fintech, part, wine business. And actually all of the technology that we've had has been built by a really good advisor that we've got on retainer and an outsourced development agency. So, and our data team who are in-house, to be fair. But you really don't need to have that founder, and you can actually waste a huge amount of time, especially if you are the more commercial one, looking for that right person. Because tech guys understandably don't want to build something when there's no traction, but in some cases you need to have something in order to get traction. So it's a chicken and egg type situation. So I think that's point number one. Point number two was thinking that you had to come up with a really novel concept. You could just reiterate on or iterate on an existing model that works. It's much easier. The unique thing about WineFi is the strength of our data models and our investment analysis, which has actually surprised me how few wine companies are carrying out any analysis at all, let alone at the level that we are. And ultimately the syndicate structure. The platform is just for our clients. It's just a way of investing and tracking the value of their investments. And then I think the final thing is just like, just start. I think I procrastinated, and I've spoken about this on other podcasts, but I think I procrastinated massively by just reading around entrepreneurship. I have read like every entrepreneurship book under the sun, and really, it was a waste of time, because I think I thought there was going to be this light bulb moment where you go, okay, I know everything I need to start a business now, and actually that only comes from doing. And the most irritating thing, and please, if you're watching this, don't do and think about starting a business, don't do what I did. The most irritating thing is, because it was now like 5, 6, 7 years ago that I read all these books, I've forgotten most of what they say anyway. And so I find myself like going back to them and going, oh, this is really, really relevant to me now. But it's like, I've done the work once already. And actually, if I just picked something up that was like, we're looking to figure out our unit economics. There's this great book here on figuring out unit economics. And then read it as I was trying to figure out my unit economics. It's much easier than you at like 23 going, well, actually, now I understand how unit economics work. But it's not, because it's not directly relevant at the time, you forget it. So
two good things. I think the co-founder thing really resonates with me. Before I started LNGR, it was almost like dating for me.
Yeah.
I was like, I can't wait to find that co-founder. And then as LNGR kept going, I thought, hang on a sec, we're signing clients, booking meetings.
Yeah.
I don't really need, and we got a great team.
And also you then attract people to you. You can attract people and then call them a co-founder if you want to.
Absolutely. Just on that, you're a very optimistic guy, which I love. Sales background, I think, is there. Who keeps you in check? Who actually says to you, look, Callum, I love the energy, mate. This is not a great idea. Like, is it your partner? Is it the family? Is it the team?
Yeah.
Is it you? Do you look at yourself and think, fuck, actually, I'm maybe going a bit too full throttle here?
Yeah. So no, it's a great question. I think it depends on the context. My wife certainly keeps me in check on certain things, but no, internally, I think the first is our operations director, my co-founder, Ollie Thorpe, who's very, very level-headed, and is very quick to tell me off if he thinks I'm going on a side quest. And we use an Alex Hormozy phrase that you've probably seen, but the concept of the woman in the red dress. Have you heard of this?
No, I know of him, but
Yeah, sure. So in The Matrix, there's a scene where the main character is walking through a crowd and he gets distracted by a beautiful woman wearing a red dress walking through the crowd. And someone tells him, not to follow that because it shows that he's in the Matrix. He turns around and actually it's an agent holding a gun to his head. And we talk about that a lot in a business context, because it's like, actually the stuff that you think could be the new sexy channel that you're going to pursue is almost always a distraction, and it's almost always a waste of time that could kill the business. So Ollie's very quick to remind me of that. And then I do think if I could pay myself one rare compliment, or at least the business one rare compliment, it's that I do think that we are spectacularly well advised. We've surrounded ourselves with people because, I don't know what I don't know. As I mentioned, this is my first business, and I don't have the ability, therefore, to pattern match from previous experience. So I would, depending on the advisor's expertise, ask the advisor about certain decisions. We've got the chairman, Shalem Patel, the chairman of Lucky Saint, is on our board. I mentioned Michael Saunders, CEO of Cotri. We've got Johnny Keeling, the former CGO of CrowdQ. We've got Fergus Lyle-Smith, who's built multiple businesses. Like, these are amazing people, and they've all done it before. And therefore, actually being able to sense check major decisions, especially decisions that relate to money directly or indirectly meaning focus. There's a lot of people to sense check with. And I think it helps that I'm actually very insecure. I don't seem like it because I'm a sales guy and I present well, but there's a huge degree of self-doubt. It's not imposter syndrome, but there's a lot of self-doubt.
Why? Where's that stem from? Because I'm quite similar as well in terms of the self-doubt. There's always somebody in my head saying I can't do it.
Honestly, I don't know. I think it's I don't know. I've always been, quote unquote, like a high achiever in terms of academically and wanting to be above my peers, but that has always been driven by a sense of deep insecurity, and that's not something that I cry about. It's just I feel like there's a great quote that I love, which is self-esteem is just your reputation with yourself. And I think that you need to build evidence that you are what you say you are. And I feel like as a founder, until you've sold that business, until you've built that profitable business, until you've, if you're venture backed, delivered an ROI for your shareholders, but basically proven to yourself whatever you wanted to prove to yourself about yourself. And in my case, I kind of don't know what I'm trying to prove other than not let down the people around me. I feel like it's always going to be that way. I mean, maybe it's something that I should talk to a counselor or whatever about, but at the same time, it's a massive driver and a massive motivator. And I'm very happy talking about it publicly. Yeah. It's not something that I'm embarrassed about. But I think often people, because I am a former sales guy and I do stuff like this, I think people are often like, oh, he's so confident. And actually they don't see the fact that, I might be externally able to present well, but, internally you're constantly racked by, is this the right strategy? Should I be doing this? Who am I going to let down? I overthink so much. And I know lots of founders that do share that trait, but I also know lots of founders who don't. And there is a whole category of founders who are just like, I'm right, this is the way. And I don't think there's necessarily a wrong answer, because that's conviction in a way.
No, I hear you. I'm just trying to think it's compelling stuff. I think the overthinking thing, I don't have that as much.
Yeah.
I fear maybe inaction more.
I definitely fear inaction.
So if somebody says to me, if I get on any sales calls, or if I'm thinking, okay, what's the cost of me not doing this? If we don't hire this expert, do we then pump loads of cash and figure out in 3 months and then maybe hit it? Or do we pay this a premium to then just get the job done?
Oh, yeah.
And then you sort of weigh it up. But no, I think the cost of inaction is it's definitely what drives me. How do you I guess then just being that vulnerability piece moment, do you have any days where you're just like, you know what, guys, I can't be fucked?
Never.
Really?
Never. I if anything, it's the opposite, because I am so bricking it about being not up to the task that I overwork. And I think that the thing that is the risk, as you've correctly said, is procrastination. You need to drive outcomes, and you need to take bold moves. And if you end up sitting still, that can kill the business. I had a very interesting, so we had a board meeting on Monday. They won't mind me saying this. But a big focus for us, we're in that sort of adolescent stage of a business when we're figuring out our unit economics. Big focus for us is now bringing in, we're not sure what we're going to call them yet, chief growth officer, head of growth, performance marketeer, whatever. But someone senior. And I've really held off on that because I don't want to increase our burn rate, and I want to figure out our unit economics first. And the board made a very valid point, which was, I'm not a B2C marketeer. I don't have any experience whatsoever in that field. We're doing a relatively good job based on what we've currently got, and we're growing really fast. 24% month on month growth on average. But how much faster could we be going if we actually put the right person in the right seat? And what would that eventually mean for profitability and everything like that? And it's the first time that I just went, well, yeah, that makes sense.
Yeah.
And it's almost like I needed that external permission to increase spend, even though it's ultimately my decision.
Right. Yeah, interesting that.
Yeah.
Who you just digesting, but who are you actually building this for?
Sure. So the vision is to make it feasible for fine wine to form a part of every portfolio for the very first time. It doesn't mean it should form a part of every portfolio, but we need to be, wine has all of the characteristics of a mainstream asset class. If you believe like property is a mainstream asset class.
No, Callum, you misunderstood me. Sorry. Who are you building it for in terms of, are you building it for yourself? Are you building it to understand, like your mum and dad? Like, look, dad, your dad's exited a couple of businesses. He's doing really well. Are you building it for your wife? Is it the team? Is it more of a internal?
I hate to say it because this is going to sound like it's a made up answer, but this is my first business. It's not going to be my last business. I think building it for shareholders and for clients is my key focus. Reputation. I think that's what I want out of this more than anything else. Even more so than any cash, which surprises some people. There's a lot of founders that feel the same way, especially if you go the venture route, because people have trusted me with their capital, both clients of WineFi as a business and clients who have invested in WineFi as a shareholder. And actually, if we can deliver a great ROI to both of those groups, I will sleep easy at night. And I know that we would come away from it with a great reputation. And, Ollie Thorpe and I talk about this, all the time. We're going to work together to the end of our careers, doing whatever. At the moment, we're focused on building, a category defining brand within fine wine investment. And until we have accomplished that goal, that will be where our absolute focus is. I want to build a 1,000-year business. Probably 1,000 years is probably quite ambitious, but But a business that is self-sustaining and is, you think about it in the same way that when you think of an index fund, you think of Vanguard. When people think of fine wine, I want them to think about WineFi, and that overwhelmingly is the core driver for me, which is an interesting one, because I haven't really thought about it before in those terms.
Well, yeah, I was just very curious. You're very passionate, as we're speaking now, you're very passionate about delivering shareholder value, being optimistic, winning 24% month on month. You've got, a laundry list of fantastic names. I don't know, if it was me in that seat, I'd be like, fucking hell, like this is like a lot of weight. Like I struggle just with myself. When I wake up some days and I go, I can't do it.
Yeah.
And you've got, kudos to you, man. Like that's a lot of, for me as a bootstrap founder looking in, having like a massive entity backing me already would I'm shitting bricks.
Oh, yeah.
I don't know why. I don't know why.
No, but I think I do. But
yeah,
I'm not. I don't want any of your listeners to take away, or your viewers to take away, is like I wake up and I'm always super confident and like ready to go. I always go, but I'm there's loads of days where I'm going, oh God, what fresh hell is this? That kind of thing.
Elaborate. Tell me just one recent one, maybe that that you haven't spoken publicly about.
Yeah, sure. So on Saturday, so I put up quite a punchy LinkedIn post. Basically, we'd had effectively a whistleblower reach out to us about some bad behavior in a business within our space. And I kind of immediately was like, white knight hat on, thinking, okay, this is effectively illegal. And I sent the evidence that this person had provided to our lawyers saying, is this legitimate proof of wrongdoing in your view? And I wrote a LinkedIn post that was kind of intended to be a bit of a warning saying, we have had a report that this bad behavior has occurred within our space. I didn't name the company in question, obviously. And it was supposed to be like, be aware that this is happening and do your own research and things. And actually, we had a load of people reach out speculating who it was. It was a big distraction for us. Obviously, I wasn't going to comment on any of that stuff. I ended up deleting the post, 2 hours after I posted it. But by then, the damage had been done to a degree. And actually, our lawyers came back and said, look, this isn't sufficient proof of wrongdoing in our view. And they also said, look, it's not your fight. And my pushback to them was, well, if we are aware that this behavior could be occurring, it's our job to alert the market. Otherwise, how can we be the market leader? Are we not going to be complicit if we remain silent? And our lawyers very reasonably pointed out that there are ways of doing that doesn't involve a very punchy LinkedIn post. For example, saying like, here are the things to look out for in order to protect yourself if you decide to access collectibles as an asset class.
So framing and positioning.
Yeah. And I was like, oh, yeah, obviously, damn. And I spent basically all of Monday worrying about that and, worrying whether I'd taken the right approach and whether that was unusually gung-ho from me. And that's the kind of stuff that like I dwell on. And I'm very happy to talk about that like candidly because, you don't have all the right answers. At that point, I acted. It wasn't impulsively. I took the action that I thought was best at the time, and actually, I recognised that there was a better way of doing that, and therefore, I spent quite a long time going, "Why did I do that?" So that's the first example that comes to mind, and that was like 2 days ago.
2 days ago. No, well, look, thank you for sharing that. I think I'm trying to think what mine was. I think I really screwed something up.
Yeah,
I sent a contract to the wrong person, and they signed it, which I thought was funny.
Yeah,
but like, there's been some howlers I've had. I didn't have any income, famously. Nobody knows me. I didn't have the income for
podcast.
I didn't have any income for like 3 months even.
Yeah.
Selling shoes and ties.
Yeah.
When I first started, that was fucked.
Yeah.
Looking at job postings, but no, Callum, look, we've only got a few minutes left.
Sure.
Just to let you know, this is typically this is the best bit I think for some people because I'm unprepared. This is where the tables are turned.
Okay.
You get to ask me a handful of questions.
Yeah.
You're more than welcome to. We had one founder that said, "Hi Nick, I'm done, thanks," and left. So you don't have to if you don't want to.
No.
But this is the segment of the show where you get to ask me anything off the table.
Okay. I think the thing that I find most impressive about you is that you are bootstrapped, which means you don't necessarily have that, as you just alluded to, you don't have that safety net of moving from salaried employment to paying yourself something from the investment that you've raised for the business. for context, when I left Nomio, which was my previous startup, CEO very kindly allowed me to fundraise whilst I was still within my notice period. And so by the time that notice period had ended, I stepped right into admittedly a much smaller salary as a founder. You didn't have that.
No.
How scary was that?
Great question. It wasn't actually that scary, and I'll tell you exactly why. If anybody's feeling this right now, it's because what I came from, it couldn't get any worse.
Right.
So, like, my baseline was always going to be some form of private market sales.
Yeah.
That's my baseline. That's my safety net. I'm never going to not be hired in that position, if that makes sense. Right? I'm worst case, I'll be a junior SDR, they'll pay me 50 grand and that's it. I will have that safety net. The fear was just excitement, unknown.
Yeah.
What the fuck am I doing? It wasn't, I think I always had a safety net in my head. I thought, okay, well, worst case scenario, I can just go back to do that. And that's how I thought. I can imagine it being really scary if you're 19 and you don't know what to do. And or you have kids. Maybe not. Maybe you're just casual and a bit blasé back then. I don't know. But no, but definitely, I think I came from a lot of disruption. And I was like, you know what? I think forging my own path would be calmer,
anything is better than this.
Calmer, clearer, more concise, on my terms, my structure.
Yeah.
And I just thought,
Interesting. How big's the LNGR team now?
We are, I think we should hopefully be 8 or 9 at the end of this month. Yeah.
Rockstar.
No,
is that 12 months?
12 months last June. So I actually had a massive dip. In June. I felt really bad. I hit 1 year. I don't know if you had this with WineFi.
Yeah.
I hit 1 year and I was like, whoa, done it.
Yeah.
And I was like, who the fuck do I call?
Yeah. Oh yeah.
Like, who
could have called me?
Very sweet, Callum. I was like, who the fuck do I call?
Yeah.
What do I do? Like what do, and I had 2 days where I really struggled to leave a room. I was like, okay, we made good cash.
Yeah.
I bought a t-shirt or something and just a celebratory t-shirt and I was like, I struggle. And then I spoke to my therapist about it and he goes, it's pretty normal, mate. Like you've been on adrenaline for a year.
No, definitely. And I mean, if I can offer any unsolicited advice, I found joining founder communities really valuable. So Founders Capital, who are one of our shareholders, they ran it was a yacht in Croatia in September, which was
I think I saw this on YouTube.
Very swish. It was really good. It was very well done. And I think it's the first time I've been on a yacht. But what was amazing there is we were probably the smallest business, with 2 million turnover. And at the time, and there were, amazing founders on there. The CEO of Grantify, CEO of Runner that's just sold to Strava. And what was quite funny was it was the conversation. You could speak to a founder, who is 60 or 50, and it was like you were talking to just one of your mates because all of the shared experience was so directly relevant. And whether you're doing 2 million or 200 million, and it was this sense of, and it's been an amazing thing for me because you're right. There is a question like, we think we figured out our unit economics, which for a business is like massive, but for everyone else, they're like, what is,
cool.
Nice. What is
this?
This is really, this is so dull. And my wife, who is amazing and has been on this journey consistently, she got excited because I was excited, but without really having any context of what it is. But you can't call your mate and be like, figured out unit economics. They'll be like, okay, cool.
Language at work.
Yeah. Don't call me again. So I do think, having people that go on that journey with you is really important. I've got another question. If you
please, we've got last question. We're looking at our producer of it. Yeah.
What aspect of running a business do you find? Can I ask 2? Yeah. Okay.
Oh, fine.
Which do you find the hardest and then the most boring?
The hardest for me, so I've recognized I'm the bottleneck now for new LNGR clients, which is tough to admit.
Because you'll also probably be the best salesperson because it's your business.
Well, try.
Yeah.
So that was the hardest, and I had that revelation last week.
Yeah.
So that was the most boring for me. Easy is just like, I think the most boring. What is the most boring for me? I don't know. I wouldn't say boring, but there is still a question over I love LNGR. I love partnering with other founders
Yeah.
and booking meetings for them and seeing them win. I love that.
Yeah.
Like, maybe being open and honest with you here, is it a diehard passion of mine such as WineFi? I don't know if I don't know, but all I know is that we are very good at it as a team.
Yeah.
I love it. It's my first business. I'm really enjoying Founders with Nick.
Yeah.
And
So am I.
I know, I'm loving it. But I don't know if that was a good enough answer, but I don't know. I don't know what the most boring thing is, Callum. Nothing, I don't ever wake up and think, fucking hell, this is going to be dull.
Yeah.
Like, not yet, but I think my vision of who I want to become, I'm not tied to LNGR. My identity, we're good at doing something. I leverage that. We package it, we sell it.
Yeah.
Clients are happy. I'm happy. We're happy. But I don't know, like,
does
that make sense? So I don't know.
It makes complete sense, but I don't think that's something that you should beat yourself up about. The passion-led element, because I think the most successful entrepreneurs in the world see business as a game. And again, Alex Hormozy, who, if you haven't,
unbelievable, 2 plugs.
I know, 2 plugs. I'm very embarrassed to say this, but I'm going to one of his seminars in Vegas for 2 days with Ollie Bruce, who's the CEO of Pinpoint Media, because he's that valuable. But he talks a lot about business as a vehicle. He has a company at holdco level called acquisition.com, where there are a bunch of businesses that sit underneath them, and they just have like specialists in, media buying or in sales, and they just deploy them into these companies to try and grow them, basically. So it's like a framework. He's sector agnostic, beyond the basic thing that you need, which is like, this is where my experience is. So therefore I understand these businesses, so we're going to focus on these businesses. But like, is he passionate about idea Y over idea X? Like, almost certainly not. And actually, I think there is, because it's such a great narrative to be able to say, oh, I'm super passionate about X. I reckon there are far fewer founders who are actually like, I'm the guy who loves dry cleaning. It's like that kind of thing. Like, we are revolutionizing hand sanitizer, that kind of thing, than actually exist. And it's because you need to tell a story. That's your job as a founder. You need to be able to talk about the business. I think wine is easy because it is actually a passion, because it's wine. And 2, because it captures people's imagination. But like, if you're selling toilet paper, and I have no doubt like the founders of Naked Sprout are passionate about what they're doing, but like, you need to be banging the drum. Great example, Amelia Christie Miller, Bold Bean Co. I actually do think at this point she is super passionate about beans, but she's done an amazing thing, basically going like, we're obsessed with beans as a company. And as I say, I think that is authentic. But the narrative that you say to market the business and your own personal motivations, I think can be different. I don't think there's any shame in that.
Well, I think that's well said. Yeah, I think that's something. I think Founders with Nick for me is going to be the big thing.
Yeah,
I'm very passionate about it. But look, Callum, thank you so much. We've producer's phone's ringing.
The phone rang.
But ladies and gentlemen, hope you enjoyed that. You can find WineFi where? Everywhere.
www.winefi.co, or please do reach out on LinkedIn. We love we always love meeting new people, so please do get in touch.
Top man. We're going to go for a Kanye. See you later. Bye.
we're going for Kanye's.
Come on, Kanye's. Thanks, Callum. Cheers, mate.
Nice.
Ladies and gentlemen, boys and girls, thanks a lot for watching this episode of Founders with Nick. I really hope you're enjoying Callum. He's really articulate, trying to get underneath the hood a little bit more with him instead of asking generic, boring questions. And if you're liking the show and you're founder curious and you're thinking of quitting your job, give us a like and subscribe. We've got a WhatsApp group now of people that are thinking about quitting their job. We're calling it the Notice Club. So potentially find a co-founder, spitball a few ideas so you don't feel totally alone like I did when I quit over a year ago.